Today we're going to be talking about hitting the stops at the open. Stay tuned, traders. We'll be right back. G'day traders, Stacey Burke from Stacey Burke Trading. It's Tuesday. A lot of big moves yesterday, especially on gold. The British pound had a very good trade as well. Today we're going to be expanding on yesterday's video, mastering this one simple concept. And that concept is that at the beginning of the 12 candle window, we're going to see the market go from contraction to expansion. And that expansion is about hitting the stops, consolidating the market, and then either revisiting a low or a high or trending the market. Now we saw that in all three sessions in Asia, London, and New York last night for some 50 pip moves with the trend, 25 pip stop hunts into the trend, and an explosive 100 pip plus move in the US session. I'm going to go over some things again today, and I'm going to clarify a couple of things for some people and some questions that were asked. But before we do that, what I'd like to do again is get everybody to hit the like button. And again, thank you for a ton of great feedback, great comments. A lot of traders really starting to identify with this, but also understanding the concept that this is a performance profession. It's one thing to understand what is going to happen, but another thing to also be able to do it in live time. I'm going to nail one thing right on the head right now. We're talking about identifying things literally right down to the 15-minute window in that first hour to either have already positioned yourself maybe in a 25 pip move, or to identify the box that they're building with the stop hunts, maybe taking the range from 25 to 50 pips. Now you've got a 50 pip range, maybe at major round numbers. Maybe you're looking for a trend trade based on that stop hunt. You're going to go long, maybe you're expecting a stop hunt high, a stop hunt low for the long trade. Off of 50 maybe it's off of double zeros. But again, we talk about being prepared, going to the market so that you're not chasing the movement back and forth and getting whipsawed inside and then missing the trade when it does happen. So coming back to that original premise about using the timing windows, that first hour typically will be our stop hunt, and that can be taking the market to a new high or to a new low, or we may be at a quarter level. We could be at a 25 pip box, we could be in a 50 pip box. And I've talked about as the day evolves, oftentimes that range will expand with London and New York. So we may have a 25 or a 50 pip box in Asia. That may expand out as we get to London, because as the market moves and the range increases, they may be working between 50 and 0. They may open the market, they may have price action coming down inside of the market just as Europe London window opens. And again, I've talked about not trading inside of the round numbers. This could be a quarter level, this could be 0, this could be 75. I'm looking to trade at the numbers, meaning that if it's not at the numbers, I have to be at a high or a low for me to take that trade. So if I'm nowhere near the high, the low of the day could be down here. That might be Asia, could be London. High of the day might be up here from the previous session. But if I'm here, I'm not trading in here. I'm not trying to catch the move back and forth. They may come down right away and then come back up here and give us a sell signal down to, maybe it's coming down to zeros. Somebody said to me yesterday, that's all great looking at it in hindsight. Make this very, very clear. If you can't do it, understanding that we're breaking this down minute by minute within a 15-minute cycle at major round numbers, and it's about how does price behave when it gets to those levels. What was your plan coming into the market? Is this an overall uptrend? The stop hunt's down. Maybe I'm going to get a W for a reversal trade that grinds its way back up to the high of the day for a 50 pip move like we saw yesterday in London and we saw Friday in London. So these are the kind of concepts that you need to understand. You get in this trade, it comes down, maybe they've come back up here in that first leg, and you decide to short it, and it only gets part way down before it reverses, and you're still holding on to it, but meanwhile, that's the stop hunt into the W for the 50 pip continuation. How does price behave when it gets to those levels? Expansion, expansion. Stops here, stops here. There could be a peak here that they've come up and hit. But they've gone up to a quarter level, they've auctioned down to a double zero level. Maybe they go up to 0 and down to 75 like they did this morning in Asia on gold before moving it up to 50 for 75 pips. What is your plan going into the market? In that first 15 to 30 minutes, they will expand the range. They may work one side in the 30 to 45 minutes. So they may go up in 7.5, maybe 15 minutes. They may go up 7.5, down 7.5, and then proceed to work down over the next 30 to 45 minutes in that first hour, which means when we get to our middle hour, the equity hour, 3 a.m. New York, 9:30 a.m. New York Eastern Standard Time, but 3 a.m. for London, 9:30 a.m. for New York Eastern Standard Time. Equity markets. Last night the equity market pinned into the W at the open before marching away for a 100 pip move. So you need to understand the timing window, and then also understand very rarely will you get a trade in that first 15 minutes. You will get a move in that first 15 minutes. And again, remember what we're talking about. We're talking about the market being in consolidation. It may be between, you may just be able to visually see there's two numbers there, and there may be some lower highs or a previous low before the market went up. They expand the range. We get into expansion now. The range expands. They do a stop hunt. Okay, 15 to 30 minutes. Expand the range, work one side. You might want to take a trade up here for triple top, an M pattern. It might be an M or a W. We can get a normal M, we can get a shortened M, we can get an extended M. The market then works its way down. How far is the average stop hunt? 25 to 50 pips. Stop hunts on average are 25 to 50 pips. What that means is that it gets 25 pips down. How does it behave? Does it keep going down further for another 25 for 50 pip stop hunt and start to work the low? What time is it? What time is it? Okay, where are we at in that 15-minute cycle? So we're on a minute chart, but are we towards the end of a 15-minute candle? Are we halfway through? Does it start to pull back in 3 pushes like we saw on Friday night in the US session? 50 pip stop hunt down, 3 pushes into double zeros before coming back up 25 pips, coming back down, and then taking off for 100 plus pips and never coming back. Hit the stops, consolidate. What is your bias? Where are we? Is it day 0? Is it a narrow range day? Or is today the first day where we've broken a new high? That means, okay, day 1, level 1. We might be going higher today. It's day 2. We looked, there's gaps on the daily charts from last week's breakout trades. Maybe they're going back there to hit the stops. They went up there this morning in Asia. So have a plan and then understand that, okay, I'm looking for a long trade. But what happens if they hit the stops up top? Then they start to come down. Okay, well, I'm looking to buy low. So what does a buy low look like? I'm going to look for a W, a 1, 2, 3 reversal off around numbers, 3 pushes down, and an engulfment for a shortened W and an extended W. Where's my 50 pip box? Round, major round numbers. The quarter levels are the extended stop hunts for trapping volume. What's the overall trend? Is it a trend? Are we in a trading range, or am I looking for a false break, stop hunt, reversal trade into the next session for a reversal down to the previous low of the day or low of the session? So these are all the little things that are, again, timing. Gold, 15-minute charts. Okay, I don't find the 1-minute charts as clean on the pound. The 15-minute charts, perfect yesterday. They took out the previous day's high. They auctioned down in Asia, went down and gave a W reversal in the London session for a 50 pip move up into the US session. 15-minute charts, major round numbers on the pound. We'll look at that today. timings are your most important thing to understand. It's all about the timing and then the number levels. How does price behave when it gets there? 15 to 30 minutes, you will have a high and a low most likely already put in place and the range expansion occurring. The next 15 minutes in that 45-minute candle window, now we're either working one side or we're about to trend. So they're either maybe working down into the low for a reversal trade off the low or the high, or now they've pulled it back inside after the stop hunt and they're going to trend the market. So they've hit it high, hit it low, pulled it back inside and take off and trend. Hit the stops, move the market. Work off the numbers, keep it simple, traders. Again, that one simple concept. I want to be out of that market in an hour. I'm not hanging around. So I got a very good question about a couple of patterns that occurred later in the US session towards the later part of the trading day. I don't trade at the close. There are opportunities there, but regardless of where I would be at in the timing window, in those gap times, I will only be looking to trade off the high or off the low. So in order for me to be doing that, again, I'd be looking for major round numbers, and I would be looking for an engulfment after a blow-off move in an extended stop hunt. So some of those areas, again, not super crazy about trading because I know at the open of the session the market is going to move fast. It's going to expand the range, consolidate the market, and again either work into one side for a reversal trade or it's going to trend. So knowing what your plan is heading into the session, that market can give you 50 pips and you can be done in 1 hour. It happens every single session. Sometimes it may be 25 pips. You might get 25 and 25, but it'll usually be done within that first 2 hours of that 12 candle window. Keep it simple. Step back, work off the numbers. Don't get caught inside chasing the moves. That's where they can jam you in on both directions. You get whipsawed, not sure what happens. Once they've taken out an extreme, there'll usually be a pin on one side or the other. They may auction into a level and pull away. But again, that's the same thing. It's a stop hunt into traders who are already in profit, gets them out at break even before they hit the stops on the other side, and then they may reverse and resume the original trend in the direction that they were breaking to first. Getting the first mouse caught, getting breakout traders in, or getting people to chase that move, jamming them up high or down low before pulling back, locking it in, and shifting away. And I'm sure many of you have been caught. They'll dangle price and hang it down and it's ready to burst and blow away. You can't handle it. You get in and then bang, the next candle locks it in and proceeds to march away, and you've just sold the low of the day or you've bought the high of the day. And if it's heading into the US session, that may be a massive move going in the other direction. So keep it simple, traders. Stick to the timing windows. Focus on the highest priority trade setups, meaning that let that first 15 to 30 minutes give you your information. Sometimes, like this morning in Asia, they may give a trade in that first 15-minute candle, but it'll usually be after they've done both sides of that 25 pip box. If they're in a 50 pip box, it'll move 50 pips. So stay disciplined, traders. Stay focused. Again, thank you for a ton of great feedback. Step back. Focus on understanding those 15-minute rotations. Let the market show their hand. So we're not trying to predict. We have an underlying bias of trend, but let the market show you their hand first and then piggyback on their trades. Have a great trading session, and may the markets go with you.
So Thursday, Friday on gold, we potentially had a day zero situation. Although not a narrow range day, we had peak formations on Thursday, peak formation lows on Friday, locking in the high, locking in the low, and then going into sideways consolidation Friday into Monday. So again, just coming back to our original bias in the market, we knew there was breakout traders from Tuesday's breakout trade on our daily chart. So Tuesday was a narrow range day. We had a day zero, and then the breakout on Tuesday from Monday's low. The market then proceeded to go down for 3 days and giving us a reversal day on Friday, going into consolidation on top of the Friday range into the U.S. close. And again, just we'll blow this up talking about our double zero boxes. So again, we came inside of a double zero box. The market layered on top of the double zeros into Friday's close. Heading into our Asian 12 candle window, the market moves up 2 double zeros. So again, just coming back to some simple concepts. 1 push, 2 push, 3 pushes into the numbers. It broke out of the lower high, layered on top, took out the second push high. Now understanding that although this is the high of the day, we'll look at this on the 1 minute chart. The last trade that came out of the US session, the short trade, came outside of that 12 candle window. We have stops above there. Now obviously the high of the day is up here, but we pushed and pinned through the high, pulled back. They came back a third time, and the short trade was initiated here, meaning we know there are stops here. So the high of the day is up here, but the bulk of the money in terms of break-even stops, stop losses, whatever, they would have most likely been on this third shoulder. So this is the sort of type of thing you want to be thinking about when you're heading into a trade, or if you're in an existing trade, knowing that the market may not necessarily go all the way through to the previous day's high. But you'll notice also Friday, the blue line is Thursday's high, which was the top of our box. They pinned through it, pulled it back inside. And when the market auctions up to the double zeros in yesterday's Asian session, again, this blue tracer, this blue line from Thursday's high may act maybe at that double zero area. It may still be our boundary for a reversal area to occur. When we look at our 1 minute chart, coming back to the Asian session, just going back to, we talked about the simple concept, and today we're talking about hitting the stops, hitting the stops. The market in our in the rollover time goes up, gives us a high. They come back down and take out the low of the day. Get rid of this green line. The market comes back into consolidation into the open of the session. We're at 50. The market immediately goes higher, hits the stops, pulls back, hits the stops again, breaks higher, pulls back, breaks higher a third time before pulling back. And again, now this bar right here is the beginning of our second 15-minute candle. So 15 to 30 minutes, making a high, making a low. Well, in this particular case, obviously, they're focusing on making the high. So we have our low of the day, low of the session right from the beginning. Yes, we have swing lows below there. Obviously, there are stops below these levels. Okay, and the last existing trade most likely would have been the W reversal midstream. The stop hunt back on the traders who went long. But point being, we have a low, and then they proceed to work the high. They work the high. Then we get the beginning of our third candle, our third 15-minute candle. So now 30 to 45 minutes, we're working in one direction. And obviously we're working the high. The market comes up inside of our peak formation on our third 15-minute candle. They come back, hit it one more time before engulfing on that right shoulder, pin hammer, and then the reversal. Okay, note also we have higher lows all the way up. Again, I mentioned this yesterday. These lows are obviously where there will be stops. Working the high, creating higher lows, getting people to follow that trend up. That gives this fuel on the way down to have a successful trade. So if you want to go short, you want to obviously have a middle structure or a structure right up top near your trade or down low near your trade for a geometrical trade. You need something for this to break through to go to break even. Meaning that, yes, it could blow off and it could go vertical, but when you're inside of a range like this, if you don't have something for this to break through, then most likely they're going to come back into your trade and put a middle structure in place. So they put a high peak formation in place in that second 15 minutes, and in the third 15 minutes they work the high, give us our M structure for the reversal trade of 25 pips before taking out the low of the day, pulling back 1, 2, 3, 1, 2, 3 at 50 at our round numbers. Okay, before giving us the short and W for the trade back in the long direction. 25 pip stop hunt up to the second leg down. Okay, but then that market proceeds to come down again. So now we have one push, two pushes, okay, and then the low of the day, which if we go back and mark our low of the day structure in place, we have a third push to the low, and it also is a blow-off move. Big move, and then ending on a 1, 2, 3 sideways at the low of the day with a pin through the low, a 3-bar reversal before pulling back and trending back up through those highs. So again, if you're already done, you've got your pips, you're not even here, but again, we're at the low of the day. So although we're out of our 12, we're near the end of our 12 candle window, we're at the low of the day. This is a tradable area. And it's after one push, two pushes, three pushes, and a blow-off move to the low of the day. Coming back to the original premise again. Hit the stops, hit the stops. They're working the high. They continue to hit the stops on the top portion. These are peak formations, peak formations, peak formation, right shoulder, reversal. The market then flips the book, proceeds to auction back all the way back up through the 00 box into the next 00 box. And again, taking a look as the market's about to open, where are our numbers? 00s, okay, 25. What that means to me is I'm inside of a box, a 25 pip box. The market opens and we've already got a peak formation high, so we've got a high of the day, okay? Then they've locked that in with two lower highs. Okay, there's a profitable trade there. Where is the money? The stop hunt is up. So people have gone long on this, thinking this is a W off 00s at the open. They go long, one push, two push, three pushes into the high. Hit the stops up top at 25. Pull it back inside, consolidate, and drop it down and hit the stops. So hit the stops, expand the range, hit the stops. Hit them a second time. Hit them a third time. There's our shortened W 3-push pattern. 00s is our entry or better. I know some traders bought the third pin down inside after we'd had this pullback. We're at 00s. Hit the stops. Hit the stops. It's an understanding that above 25 is a sell area. Below 00s is a buy area. Okay? We're in an uptrend. Stop hunt high, stop hunt low, trend the market, 50 pips. A buying area, a selling area. The market goes up, and again, just looking at timings. Okay? 5 minutes up. The third 5-minute window is down, so we're 15 minutes in at the low. The second 15-minute candle works the low of the day before pulling away. This becomes a pin bar on the second 15-minute candle. Then we get to our London Open. They take traders higher into the 50 level, so pulls back on the first candle. There's the high of our London bar. Get traders on the first mouse shorting this. They work it in 3 pushes back up into the numbers before engulfing and coming back down. And again, this is the stop hunt into traders that were long off 00s. Consolidation. This doesn't continue down. 1 push, 2 push, 3 pushes. 3 pushes into the stop out, the breakout trade long. And again, our trend is long. Understanding this consolidation, pins on the bottom below the previous day's high. This is a buy area. This is a buy area. 1 push, 2 push. Any little small inside bar doji, anywhere in here is a buy area. 50 pips, and then a continuation of 50 pips plus, back up in the long direction. Again, our underlying bias from the Asian session. Okay, we're in an up day. Day 2, we came out of a day 0 from Friday. We've taken out the previous day's high. They've come down in 3 pushes, so they've moved it up. Auction down, stop hunt high, stop hunt low, W formation 00s, 50 pips, stop hunt back into traders that got it right, consolidation, 3 pushes, reversal for 50 pips. Now again, heading into the U.S. session, we've put a high of the day in place. They auction this down in 1 push, 2 pushes, So again, understanding the timing window, staying out of the gap time, and being prepared to go into the session seeing what's evolved. 3 pushes down and a 1, 2, 3 just prior to the 12 candle window, a breakout candle out of that 3 push pattern off the bottom for a 50 pip stop hunt to the high. This is our extended M formation. Okay, hit the stops, expand the range, hit the stops on traders that got it right. Look at all the pins on the bottom, 4 pins on the bottom. Stop hunt back up for 50 pips. So again, you may not have gotten filled at numbers, but this is a 50 pip move back up. And then we're inside. They hit the stops, they pull it back inside, creeping trend down. So they're not at the high, they're not at the low. If you were in this move off the bottom, you're taking money off the table. 25, 40, whatever it is. If you're still holding on to this hoping that it goes after it's gone up in 6 bursts, 6 1-minute bursts, especially after it paints a second side for an M formation underneath double zeros, you should be out of the market already with money. When you get a 50 pip move in 7 minutes, take the money. It comes down in 3 pushes again, understanding the timing and the equity hour. So we're in the middle hour now, and we see a 1, 2, 3. Reversal pin hammer, 25 pip move back up into traders that are short. So all these lower level shorts chasing the move, once you see that hit, okay, you can expect there's going to be a stop hunt down at the equity open. This pin bar is the first candle of the New York Open. We'll zoom in. So timing, number levels, high and low. Don't get caught in this. Wait for the market to show its hand. If it comes down here, how is it behaving? Is it stop hunting down, or is it trending down and going to break through? Well, clearly it's 1, 2, 3. They pin the bottom, pull away, come back a second time with a bullpen hammer. Okay, 25 pips. The New York market's not open yet. You can expect a stop hunt. If the equity market in New York is not open yet and you're in a profitable trade, you can expect a stop hunt. That is just how it is going to be. They pin down, 2-bar reversal, engulfment. The market breaks through the double zeros and takes off and continues to move. So again, coming back to our daily chart, understanding that there was a gap from last Monday, Tuesday's breakout trade. They're going back to get the money. There's one up here. So we may get a pullback into Friday's breakout, but we also have profitable traders up top from 2 weeks ago on the Wednesday. Somebody's in the money up here. They haven't been stopped out, or they're stopped sitting there. So the market's either going to proceed to go higher or come back down and get the trader who's in money from Friday's trade. There's a gap there. Wherever there's gaps, there's profits. There's orders there. There's money there. Let's get this. So coming back to our 15-minute chart, just understanding our levels, 100 pip boxes. 3 levels of rise, 100, 200, 300. Could the market fail somewhere around this double zero quarter level? Absolutely. It goes up and extends its extended stop hunt, 25 pips. It pulls back inside and goes into consolidation. We look at today's session. They pulled back underneath double zeros. So again, we go into our rollover. The market breaks above double zeros. Whenever the market goes above double zeros, I know that they're going to be revisiting that area because there's stops up there, which means that we're going to go 25 to 50 pips into the next box. But also our bias, day 2, we have day 1 yesterday, we made new highs. My bias is I'm looking for a long trade. So I'm looking for a long trade. They're going to maybe get people to get in early, first mouse. Okay, we've got stops just below the numbers. We got stops from the U.S. session last hour. Okay, and we got our high of the day. So we look at the market, and we know that very rarely is there a trade in the first 15 minutes. So what are we going to do? We're going to let the market show us what it's going to do. We're not predicting. We're not guessing. Let the market show you what it's going to do. Don't chase it. The market breaks down, gets people shorting, pulls back, hits the stops. Some people buy it thinking it's going to go through the roof. They chase it short. They chase it long. Then the market proceeds to work down 25 pips into the next quarter level below, but it goes into consolidation. How does it behave when it gets to that level? We know there are stops in this area. It hits the stops, takes traders down lower, doji, engulfment reversal at 75, another engulfment that takes out all those lower 4 candles. I know some traders that bought the first retest below the pin. They were confident, but they might not have done that. They might have added a position there and looked for it, how it responded, and then added another one, and then added another one. The market comes back inside and continues to make its way back up to the high of the beginning of the session. Hit the stops, expand the range. So again, understanding our box, our number box, stops above 00, stops below 75, pull it back inside, hit the stops, pull it back inside, trend the market. So you're looking for a long trade, first mouse, stop hunt high, stop hunt low, consolidation, trend trade for 50 pips or more depending on where you got in. That market came down again in 3 pushes. 1 push, 2 pushes, 3 pushes down, and the reversal for the continuation of the trend trade. So again, timing wise, okay, we're into the second 15-minute candle in the middle of the box. The third 15-minute candle now begins on the 1, 2, 3 down. 1, 2, 3 down, engulfment reversal. So they start with a stop hunt and then continue the move up in our last 15-minute candles. They can go into consolidation at the end of the hour. The new hour starts. They stop hunt down and pull it back. They stop hunt down and pull it back. That's our third push. An engulfment at the end of the half-hour point in the middle hour. So we're 2 15-minute candles in. At the end of that second 15-minute candle, the market continues its move, and they start to work into 50, working the high in how many pushes? 1. Put a high of the day in place. Okay, come back a second time. 2, pull it back. 1, 2, 3, sideways, bear hammer. Okay, 3 pushes, a little bull hammer at the high, small bar, engulfment, bear pin hammer. The shift candle comes underneath the high bull. Okay, and also understanding and recognizing these higher longs. Once they are underwater, that's the death candle. So this market has come down and gone sideways. They come down and stop hunt again, and then the market goes into consolidation. So potentially we may have our high of the day in place. For now, the market proceeded to auction sideways and now is stop hunting back down towards traders who were long at the beginning of the session. So again, 3 levels of rise. 25, 25, 25, a 75 pip box. End of the second hour, they lock in the high. Okay, 15 to 30 minutes, high and a low. Second or third quarter, they're moving the market now. We're with trend. They come back in that second middle hour and continue to move in that long direction into round numbers, working the high in 3 pushes before locking it in, consolidating, and going into the middle of the range. So again, if we look at the pound, reviewing the pound, yesterday we saw an example, a great example, same concept, but using 15-minute charts. I just not as big a fan on the 1 minute on the British pound. You can use them, but I would use them in concert with each other and understanding you're looking for what you're looking for prior to the session open. We were between 50 and double zeros. Okay, we took out the previous day's high on Friday's high. Okay, so they've expanded the range on Monday morning. Okay, and understanding the concept that once they've got other time frame traders in the market, breakout traders, end of day traders, 4-hour traders, hourly traders, whatever they may be, nobody gets a free lunch. So somebody's long on the break of the Friday's high, maybe even people in Asia, they're going to get heat put against them. So we know there's going to be a stop hunt, but they pull it back inside of the range. We're in a 50 pip box. They go below the quarter level. You're below numbers. They auction it back up into the quarter level. Okay, go into consolidation into the Europe-London Open, and then a vertical move below double zeros. When anything goes vertical like this, that's a stop hunt. It goes vertical and then goes into consolidation. We get a 1, 2, 3, and then an engulfment bullpen hammer. Okay, and that is the last candle of the first hour, just prior to the London Open. London opens up and then auctions back. 1, 2, and then 3, the engulfment. Okay, middle hour, London Open, equity hour, and there's our W. So the pin hammer was locked in, the lows. They break out, pull back, and continue the trend back inside for a 50 pip plus move back up through the high of the day. So they hit the stops up top, come back inside, hit the stops on the bottom. Okay, and that stop hunt may just be into breakout traders from from Friday's breakout of Thursday's high. They put the W in place at double zeros, proceed to work up through 50. So now we're on top of 50, below double zeros, in the upper 50 pip box. This market could either continue and break through double zeros and keep trending, day 2, level 2, or work into the zeros, possibly stop hunt down. But it all matters is how does price behave when it gets there at the timings. That's the most important part. Equity hour is key, especially for London and New York. Expand the range. We're in consolidation right now. So chances are we're going to get a stop hunt. We could get a first mouse taking us long, breaks out long, stop hunts back into the quarter level before continuing the move, and then it'll be a test at double zeros to see how that market handles it. We got the low of Asia. We'll watch how price behaves. Hopefully you got value from today's video, traders. Stay disciplined, stay focused, pay attention to the clock, wait for the stop hunts, hit the stop, look for the trade. Stay disciplined and have a great trading
traders,
session.
it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.